Good morning, everybody, and welcome to our webinar on IPM performance for the month of July. The trends are extremely encouraging, and the bounce back instills a very strong positive sentiment in the market today. There were many other events that happened in the market, the most important being a lot of sitagliptin brands getting launched in the market. In fact, there have been a lot of queries on understanding how the market is behaving post more than 100 brands getting launched in the market. So what we decided in today's session, we will be spending some time on understanding how this launch of so many generics is impacting the market and how do we see the future of this market in the next few months. So in today's session, we will be covering the competition in the sitagliptin market, a regular session on the IPM therapy performance, top 40 corporates, top 40 brands, and we look at the key takeaways summarizing how the IPM has performed for the month. Coming to the sitagliptin market. In this session, we will be covering how many players have entered the market, how they have been eroding the market share of the innovator brands. We will also be looking at what may be the future of this market, how attractive this segment is, and we look at certain historical trends which will give an understanding of how the market is going to behave in the next 2 to 3 months. Competition in the sitagliptin market. If you look at the number of players, when we used to earlier discuss how many players have entered the market, almost 50 players with more than 100 brands. But when we look at the July data capture, we see there are close to 27 players which we are capturing, and we are capturing close to 85 brands in this market today. Does it mean that less number of players have entered the market? Not really. I would still end up saying that more than 50 to 60 players have entered the market, more than 100 brands have been launched in the market. But then AWACS data, it captures the sale from stockist to the retailer. And essentially this means that whatever is getting liquidated in the market or it is moving from the retailer to the consumer, that is the capture that we show. So it is possible there are many more brands which were launched, but they are still at the stockist end. Probably in the next 2 months, we may see more than 100 brands in the market reflections in AWACS data. Now, if I were to look at the price per tablet, comparing the price, it actually gives us an understanding of what is the wide gap which is there between the innovator brand and the generics brand. If you look at the innovator brands from MSD and Sun Pharma, the price range for the plains is somewhere between 36 to 45 rupees and the combinations is around 20-23 rupees. As against that, whatever generics have got launched in the market, if you look at the price, it ranges between 7 to 15 rupees for the plains and 9 to 21 rupees for the combinations. So if you look at this, the generics are almost half or 1/3 of the innovator brands. One good thing is if you look at the price range, it's not 7 rupees, 8 rupees, 10 rupees. It ranges between 7 to 15 rupees. So whatever is the lowest price generic available is almost half of the highest price generic. So people have not reduced the prices significantly. There are some players which have still taken the risk and launched brands at a little higher MRP, not a very, very low MRP. Then we look at how the players or how many players have managed to enter the market. Now, when I'm talking about 27 players, I mean these are the players that we are capturing. Probably there are many more players which are there in the market. Probably in the next 2 to 3 months, we may be capturing all of them once whatever they have launched in the market starts getting liquidated. Now, this table over here shows the number of brands that have been launched in each of the companies, by each of the companies. Majority of the companies have launched one plain sitagliptin and one sita plus met combination. This is an experiment to check how the market is picking up their goods. However, there are certain other companies who have been extremely aggressive and have believed in tapping the share of voice lever to grab the market opportunity. They have in fact launched 3 brands, 4 brands, 5 brands, 6 brands, in some cases 7 brands. Now, when I'm talking about 5 brands or 6 brands or 7 brands, probably they may have launched more brands which we are yet to capture. But yes, there are many players who have tried to tap this opportunity by launching several brands across different divisions within the company. Not just more number of brands. However, these companies which I have highlighted in orange color, they are the ones who have launched CETA, CETA plus MET, and they have also launched CETA plus DAPA combinations in the market. So you see, it's like earlier it was Wilda plus DAPA, now it is CETA plus DAPA, which is getting launched in the market. While CETA and CETA plus MET opportunity is a time-tested opportunity, it takes time, or it will take time, to understand the DAPA plus CETA opportunity. One good part is, though the DAPA plus gliptins combinations have started picking up really well in the last 4 to 5 months, the market is now a 40 crore market. I would really not comment on how big or how growing the market is. Probably I would wait for the next 2 to 3 months to see how this market is picking up, how this market is evolving. Then we look at the impact of the new launches on the innovators. We look at how the new launches, the ones in the gray, are the generic brands that are getting launched in the market, how they are eroding the market share of the innovator brands. In terms of value, I am not seeing that great erosion. But if I were to look in terms of quantity, I am seeing almost 5% of the sitagliptin plain market today is occupied by the generic brands, and CETA plus MET, almost 2% of the market is occupied by the generic brands. However, if I were to understand to what extent this erosion will continue, is this 5% going to become 10%, 20%, 15%, 100%, is something which I need to think, and probably I need to study some historical trends. Do I have some examples of past? Yes, I do have some examples. Vildagliptin lost its patent, many brands came into the market. Dapagliflozin lost its patent, many brands came into the market. Why not study what happened when generic brands of Vildagliptin came in the market, and how the market share of the innovators was eroded? So here we have done a small table. In this table, what we have done is, planes and combinations are separated. Vildagliptin and dapagliflozin, the total number of brands. Let me take one example of Vildagliptin. The total number of brands in the market is close to 101. I have considered two major innovator brands. The innovator brands have a value market share of close to 39%. And the number of brands which contribute to 80% is almost 13. What happens to the rest 80-85 brands? You see the amount of competition and clutter and small market share that each of the balance 80-85 brands would be having. A similar phenomena I see in the DAPA market, where the innovators have a market share of around 44%, whereas 10 out of the 90 brands contribute to 80%. What happens to the rest 80 brands? Same thing, Vilda plus MET. 110 brands, 13 brands contributing to 80% of the market, and the innovator brands are a part of these 13. So there would be essentially 11 brands which are contributing to the rest 30-35%, and the balance, I would say 100 brands, are very small brands. Now this is something which I am talking about value. You would obviously say that innovator brands probably are still having some amount of premium value, and that's the reason why the market share looks big. If I look at the quantity, then probably these numbers will change. Not really. When I look at the quantity phenomena, while the market share of the innovator brands comes down, obviously because they are a little more expensive, I would say the generic brands have a price advantage. That's the reason why the quantity market share of the innovator brands looks lesser. But if you look at the number of brands contributing to 80%, it is more or less. Here it is 13, here it is 16. It's just 3 brands more. What happens to the balance 80-85 brands? That is a challenge. There is a lot of competition in the market. In fact, there may be several generic launches. However, only a few generic launches manage to grab a significant share from the doctor's pen. And why does this happen? We actually feel that now the drugs have become cheaper and doctors will shift. That really doesn't happen. There is an existence of affording patients. In fact, consuming an innovator brand is still an aspirational thing for many patients. In fact, if I were a diabetes patient and if I were asked to shift to a generic brand when I could afford an expensive innovator brand, I would still stick to the innovator brand. So many of the doctors are not shifting their existing patients to the generic brands. Some of the new patients are definitely getting shifted, but if they are not able to afford them. And also some of the patients who are on SU meds and are eligible for the newer gliptins and could not afford the gliptins, they are now getting shifted. That's the reason why our perception that now things will start quickly shifting to the cheaper gliptins may really not happen. Now, this is a historical thing that we have for vildagliptin and dapagliflozin. Now, let us look at how things look for the sitagliptin market. Sitagliptin and sitagliptin met. We had two brands from MSD and Sun Pharma. Today, after the generic launches are there, we see close to 34 and 36, a good number of brands getting launched in the market. Today, the market share of the innovator brands is around 98-99% in terms of value, and in terms of quantity also it's between 95 to 98%. To see the number of brands contributing to 80%, it will take time to gradually pick up. But I am sure we will continue seeing the same phenomena that we had seen in the Vilda plus DAPA market. It would be around 10 to 15 brands who are going to really make it big and grab that opportunity of sitagliptin patent loss. Others would be there in the market, but they would definitely find that challenging because the competition is intense, and it would be probably somebody who goes and meets the doctor first, is aggressive and manages to create an image or name. Only that generic player or those few 5 to 6 generic players would be in a position to make it big. Then we look at the attractiveness of the market in short term. What I have done over here is I have taken the 6-month trend of the market. And in this month, when the generics were launched, did the market grow substantially? You see over here, there is a growth. Now here I have taken growth over the previous month. So if I were to look at this growth of 50%, 54%, it is growth of July over June. In case of plain sitagliptin market or plain sitagliptin molecules, we have seen a 54% growth, which is a good and substantial growth. But in case of Sita plus Met, the growth is little slower. I mean, we could have expected a slightly more growth of close to 40-50%, but here the growth is only 13%. Now, obviously, because in case of generics, the price is much lower, I am not seeing that type of growth as far as the value is concerned. However, in case of sitagliptin plains, I see a substantial growth in the market. Then we also have to look at how is the opportunity. Is the pie increasing? Is because of loss of sitagliptin patent, is the market exploding? Is the pie becoming bigger? Not really. As we had seen the growth of the market for the sitagliptin and the Sita plus Met, I have also tried to look at the growth of the market month on month for the rest of the categories. OAD without gliptin and SGLT2 would essentially mean our regular SU and SU meds. Then we have gliptins, we have SGLT2, and we have gliptin plus SGLT2. Now, if I look at the growth of the markets over here, same month over the previous month, the growth is not very encouraging. In case of gliptins, we see a little higher growth because our sitagliptin is a part of this. So that 54% of growth of sitagliptin is a part of the 6% growth of the overall gliptin market. When I look at the value trends also, I see a similar phenomena where the growth over previous month is not a very substantially high growth. It's a normal growth. So it is the quantity consumption of the market is not exploding or not increasing very significantly. Now that was about the market share. Now let us look at the market share because we have looked at the growth part. Now in this market share, what I have done is, what is the market share of the SU meds, which are the traditional ones, and what is the impact on the SU meds as well as the other gliptins. So if you look, SU med initially had a market share of 74% in this OAD market, which in the last 6 months has come to 72%. So there is a 2% erosion of the base of the SU med. Now, in terms of absolute numbers, it may just look as a 2% base. But what I should be looking at is a long-term phenomena. Where was or what was the contribution of the SU med market 5 years back and where is it today? If I look at that, if you see, SU med used to contribute to around 85% of the market in 2018, and this 85% has come down to 74%, which is a substantial loss, a loss of close to 11 percent points. And this grabbing of market share has happened by the gliptins, by the SGLT2s, and as certain molecules in these segments start losing patent, there is a significant shift happening to the SU med market. Now, does it really mean that it will go on eroding and gradually we'll see this number moving from 85 to 74 to 50%? Not really, because it is only those patients who are eligible for a gliptin or a SGLT2 but couldn't afford to have them because of the cost. It is only those patients who are shifting. So eventually a critical mass would be reached, and only that critical mass will be put onto the newer gliptins. The rest would be staying on the SU meds. Then we looked at the market, how the market is growing over a period of time in terms of absolute quantities, because that will give us an idea about the patient pool, about how the patient pool is expanding. If you see this quantity growth, the market quantity growth is not a phenomenal growth, it's just a single digit growth. 5%, 5.6%, 3.2%, and this year it has stagnated. It is essentially telling that the patient pool in the market is extremely limited, or it is not growing to that extent. While we may be very ambitious, like DAPA lost patent, almost 100 brands came into market. CETA lost patent, almost 100 brands are coming into the market. So people are trying to grab a market opportunity. But is there a market opportunity? Are the number of patients growing, or is it just a shift from one molecule to another? Looking at this number, the patients are definitely not growing. So what is happening in the country? Is the patient pool really that small? Let me look at some facts on the diabetes patient pool of India. India has a population of close to 1.4 billion, and the growth of the population is less than 1% in a year. If I were to look at the prevalence of diabetes in the country, in 2009, the type 2 diabetes prevalence was close to 7%. And thanks to our sedentary lifestyle, lack of exercise, our faulty or wrong eating habits, that prevalence has reached to around 9% now. In fact, in some of the urban places, it has already crossed 10%. It's 11% in cities like Mumbai, Delhi. The prevalence rate is very high. It essentially means that 1 out of 11 patients or 1 out of 11 people today is a diabetic patient. Now, if I were to just apply mathematics of 1.4 billion to a prevalence rate of 9%, a multiplication tells me that there are more than 100 million diabetes patients in the country. It looks a very attractive number, but not really a very attractive one, because more than 50% of the diabetes cases in the country go undetected. Today, many of us in our office, in our premises, in our society, the person next to you may be a diabetic, but he is not aware or she is not aware that he is a diabetic patient. So what is essentially needed is bring this patient pool to the surface. In fact, there is a lot of detection activities that need to happen to get these patients identified. It's not that the patients are not there, but the patients are not diagnosed. And that becomes a very important task as far as the healthcare industry in this country is concerned. That was about some facts about the diabetes patient pool in the country. Then we look at competition with the other gliptins. Obviously, because CETA has lost patent, it will start for fighting with space with Vilda, with Tenali, with Lina, all this. So what is the impact on the market share of these segments? Vildagliptin plus metformin, the market share has moved from 48% to 46%, a 2% erosion. CETA, loss of patent, market share has increased slightly. Tenali again lost some market share. If I were to look at the planes, in case of planes also, Tenali, which was having a stronger market share, has gone to 42%. Vilda has lost market share. CETA has gained 3% market share, which is a good sign. It's picking up. I would not make a lot of comments on the DAPA section because the DAPA section is still picking up. Market is very small and not the right time to pass comments on how the market is shifting. This was about the sitagliptin. I thought I would give some gist of what is happening in the market. some understanding of how the market is behaving, how the market is predicted to be behaving, and how we look at the untapped patient pool for tapping the opportunity of the sitagliptin. It's not that just that, I reduce the prices and the patient pool is going to move up. By reducing the prices, I'm not going to get more patients. I need to be detecting more number of patients in order to have my, I would say, customer or consumer base for my generic brands. Then we look at the IPM therapy performance. We look at the overall performance, the growth drivers, and the growth outlook for the Jan-December. This is very important because as the market is picking up gradually, probably my earlier outlook or growth numbers may not be significant. If I look at the overall performance, almost all the therapy areas have shown a very robust performance. Barring anti-infectives, you see all therapy areas are growing by a healthy double-digit robust growth. In fact, among the top 10 therapies, respiratory and gynec therapies, which are strong contributing therapies to the IPM, they have shown a very good double-digit value as well as unit growth. If I were to look at the COVID influenced drugs, in fact, now COVID is over and you really need not look at the COVID influence and non-influence drugs, but many of our clients keep on insisting and asking for the growth parameters or growth phenomena of the COVID drugs. So we thought about keeping this section as well. So for the month of July, for COVID drugs have shown a growth of 10% and the non-COVID influence drugs have shown a growth of 16%. Now we call them COVID influence because they had some role to play in COVID. However, now it's the growth of 10% is not because of COVID, but most of these drugs, the demand for most of these drugs is more in line with the seasonal disease patterns. So that seasonal disease pattern which was leading to consumption of these drugs has really picked up well, and these drugs have started showing a good consumption. Then we look at the growth drivers. In fact, the growth drivers, I would just elaborate a little. We look at growth drivers into three sections. The new product growth, which is all the new introductions leading to that type of growth. The price growth, where I take a price hike on my existing brands. And the volume growth, which is essentially increase in the demand of the products. Now, if you see for the last 2 months, all the growth drivers are well balanced. This is a very healthy sign for any market when all the three growth drivers are well balanced. Then we looked at which of the growth drivers is becoming prominent. I will not focus more on the MAT, I will focus more on the month. If you see, majority of the therapy areas, we are looking at each of the therapy areas. For the month of July, a good number of therapy areas are having a stronger contribution from the value growth or price growth part of it. If you see typically over here, this is the green band where I have highlighted the price related growth. Usually the price related growth is somewhere around 5 to 5.5%. Whereas if you see in a good number of therapy areas like say gastro segment, nutritional segment, respiratory segment or gynec, hormone segment, the price driven growth is more than 5%, more than 6%, touching 8% as well in many of the cases. This is also telling me that a good number of therapy areas have shown increase in prices in this month. Then we also look at the growth outlook, wherein we look at the trend of the market from 2016 till July 2022. We apply the algorithms and we project the growth. If I were to look at the growth of the market in terms of absolute calculations towards the end of this year, it comes to around 4.3%. However, looking at the NLEM impact, where a certain category of drugs may be allowed to take a price growth more than 10%. That fact and a strong seasonality trend which is picking up, we expect the market to grow by around 7 to 10%. Then we look at the top corporates. Among the top 20 segment, if you see, almost all the players have shown a very robust double-digit value growth. Unit growth is also very good. Among the next 20 players, if you see, again, these players also, there may be a certain unit degrowth in some of the players, but majority of them stand at a robust value and value growth. Coming to the top 40 brands, Augmentin moves to the number one slot for the month of July. And it has, if you look at the other players also, Glycomet, Mixtard, Lantus, Manforce, they stay in the top slots. Though the positions may have changed slightly, however, they stay at their top slots. The cells which I have highlighted in green are the brands which continue to show a very robust value and unit growth. Among the next 20 brands as well, we will see a substantial number of brands like Orofer, Pantop, Pandi, Duolin, Levipil. These brands are showing, since I have highlighted in green, they are the ones which are showing a very robust value growth. So this was about what the market has performed and how the market has performed in the month of July, putting little more focus on the sitagliptin market and the brand performance. If I were to summarize how the market has performed, I would summarize saying that there is a robust growth shown by the market across all the three growth drivers: volume, price, as well as new introductions. And this definitely builds a positive sentiment, strong positive sentiment, because this is not restricted to any one or two therapies. This balance in growth is seen across all the therapies in the IPM. Almost, yeah, this is what I said, almost all the therapies have shown this type of strong positive value and volume growth. Sitagliptin opportunity is being chased by many players in the market today. Who gets into the doctor's pen habit and manages to stay for a long time is something which one should be waiting and watching to see. And as the patient pool stays limited, the competition in the OAD market intensifies. In the next 2 to 3 data sets, probably we will be in a position to give you a better direction in terms of generics, which is the brand which is picking up or which is the company which is managing to tap this generic opportunity faster. So with this, I end my session and thank you again, all of you, for joining me in this session. Hope you have enjoyed this session and wishing you a very nice weekend. Thank you so much.